Hey, Paul, it's Jess. I'm just getting you set up with the hosting permissions and stuff. Okay, you are the host now.
Okay, perfect. Can you hear me?
Yes, I can. Thank you so much for hopping on.
Okay, I'm going to do the best I can. I'm actually on my iPad.
No
Is there any way that people can be automatically let in, or do I have to do the waiting room thing?
Let me see here real quick. I think you have to do, actually, hold on one sec. Okay, I'm gonna make you co-host instead of just sole host. So I can handle the letting people in the waiting room.
Oh, if you could, that'd be great, because I need to share my screen.
Okay, awesome. I'll handle the attendees.
All right, thank you so much.
No problem.
Hey, Bill, this is Christoph. Just wanted to say hi. I may listen to this webinar a little bit.
Hey, Christoph. Hi, it's Paul Krause. Bill is
hello.
on holiday today. He'll be back next week, so I'm hosting for him.
Oh, okay. Well, he said we should maybe jump on the webinar and chime in if appropriate, if needed. But if he's not there, probably I will come back another time.
Yeah, it's totally up to you. I've got some great info, but yeah, whatever you'd like to do is totally fine.
Yeah, well, if anybody wonders where to get pre-foreclosure leads from, or any other distressed seller leads, we could talk about it. I could mention it, but I don't want to be saying something that you don't want to be mentioned during the webinar.
No, I think that's totally fine. Actually, I'm just going to cover a small segment, and then I'd be happy to introduce you afterwards. And
yeah, sure.
yeah, no, that'd be great. That would be fantastic.
Okay, thank you.
Yeah, of course. Hi, everybody. My name's Paul Krause. It's 3 o'clock. Bill is on holiday today. And if you could just let me know, I want to make sure that my audio and video is working. If you could just let me know that you can not only hear me, but also see the website that I'm sharing right now. It's a $1.2 million property. That would help me out. I'm working remotely, filling in for Bill today.
That's exactly what we see on the screen, $1.2 million.
Okay, fantastic. Thanks, Christoph. I'll give it one or two more minutes. Loud and clear. Okay, thanks, Ernestine. And again, I want to welcome everybody who's on the call today. Bill is on holiday this week, so I am standing in for him. My name's Paul Krause. I'm a realtor with eXp as well, and I'm also a licensed general contractor in the state of California. I have been with actually Bill's team for over a year now. And I host a call myself Tuesdays at noon, and we talk about all things remodeling. I'm a rehabber, investor, do out-of-state multifamily deals. And this week, we're going to have this call is going to be broken up into two parts. Just some information I wanted to share with folks. And then I'm going to bring Christoph from Land Voice on, and he's going to be talking about lead sources. If anyone at any point wants to jump in, just go ahead and put some info in the chat box, and I'll try to stay on top of it as best I can. I'm actually doing this remotely, I should mention, as I'm out of town. So I'm doing it on my iPad. So I'm working with a little bit smaller display than I normally work with. So I appreciate your guys' patience. What you see here in front of you is a property that is selling for $1.2 million. And I'm going to be showing you a couple different scenarios of some deals in which the sellers were chasing the market down. And the reason why I wanted to share these is because we hear a lot from the media that the market's doing nothing but going up, up, up. But as all of us know, there are parts of this market that absolutely things are starting to change. Certain markets are flattening out, and in some cases, other markets are starting to normalize now. So what I have here is a property that, as you see, it's priced at $1.2 million. It's in North Barrington, Illinois. This is actually a very nice suburb of Illinois. It's just right around the corner from a Jack Nicklaus level golf course, and it's sitting on 1.5 acres, and it's roughly 8,800 square foot. And what I thought would be interesting to share here, as you should see, is the price history. I want to show this to you because I thought this was very, very interesting as I was going around looking for deals. So this property was listed for sale originally back in January of 2020 at $1.75 million. The seller then waited about 10 months to adjust the price and brought the price down to $1.45 million, kept it on market, and then priced it at $1.3 million a year later. And then through the spring and summer selling season, they repriced the asset from 1.3 to 1.2 and finally have a pending buyer. So they went from 1.7 to about 1.2. But here's what's really, really interesting. Not just the fact that they followed the market down, but also that, as you can see here from the description, that the seller has over $2 million invested in this spectacular 2018 renovation. So they have $2 million invested. So you would figure part of that is an acquisition price to acquire the property, and then some of the remodeling. And as you can see here, it is a gorgeous house. They've done really extravagant work on this property. So they have $2 million invested, and they're now under contract for $1.2 million. Show of hands, how many people would sign up to do this deal? Essentially put in $2 million and get 1.2 back. Probably not too many, right? So I wanted to share this because this is a perfect example of different markets are now not only starting to normalize, but they're starting to go back to the level before the COVID enhanced pricing, where in certain markets, homes were essentially being sold well above what their real value is. Any comments on that one before I share the next one?
Did you get any comps on this?
That's a great question. I actually did not pull comps on this one. The city of North Barrington is, it's a very high-end luxury market where there weren't a lot of sales to begin with. The property is also unique in that it's extremely large. at almost 9,000 square foot. So I would not, even if I had pulled some comps, I wouldn't be enough of an expert in the short period of time that I even reviewed this deal. So I don't really know, where market pricing is.
What did
I might
it,
have
sorry,
missed it. I might have missed it, but how big is the parcel?
1.5 acres.
what did the house sell for in 2018?
That
Or
was
whatever, what was the last real
Yeah, the
sale price?
Yeah, the last sale, 950,000 in March of 17. So we're talking 4 years ago, right?
Yeah.
4 plus. So 950 grand, and they have invested 2 million.
In what world is it smart to put double the value into this? I mean, it's one thing if it's a rundown multi-door unit that, yeah, okay, with rents you can double the rent, so double the property value. But I mean, unless this thing had a trailer on jacks and bricks.
Right.
Okay, never mind. I'll shut up.
No, I mean, Sean, you're raising a really good point. Is just by buying in a high-end area, and by the way, it is a high-end area. That Jack Nicklaus Golf Club, golf course, very well respected. The country club there, absolutely. But just because you're going into a high-end neighborhood, you still need to understand your numbers in terms of, what is a realistic remodeling budget for a particular neighborhood. It doesn't matter if it's an estate neighborhood or if it's in a lower income neighborhood. There has to be some kind of viable budget. And it looks like they just completely blew it. Anyone else want to chime in on this one before I show another? Okay. Thanks for your commentary. I'm gonna show you guys another one in upstate New York next. And this has a lot to do with the dangers of chasing the market and maybe not great counsel when it comes to preparing a property for market. And again, thanks for being patient with me. I'm working from my iPad one-handed today, so. Okay, here's a property in upstate New York. It's called Hurley, New York, 5-bed, 4-bath, 1,176 square foot, which to me, actually, that doesn't even look like the right square footage, but nevertheless, it's what it says. And this one, I want to show you the, here you go.
It's just
So
a real estate.
shows 1,176 square foot. When the detail shows it's actually a 3,200 square foot property. So this is actually a property here that the agent should have proofread their information initially, because they're showing 1,176 in the main title, and yet in the overview it's showing 3,200 square foot. So it's 3 times bigger. All right, let's look at the price history on this.
Oh, well, we'll find out, and it's good that.
Okay, so this property here,
I'm gonna.
and I'm gonna see if I can mute somebody. Hold on real quick. Okay, I think it stopped, so I think we're good. Okay. This property was originally listed back in March of this year at $850,000. Only a couple weeks later, they brought the property down to $825,000. 5 days later, they dropped it to $724,000. So think about this for a sec. From March 23rd, when they first listed, to not even a full month later, they dropped from $850 to $724. So they took a good $125,000 off the property. But wait, it actually gets better. So by the time a month passed, they dropped from their $850 down to $689. Then spring rolled around, they dropped another $80,000 to $609. And as the summer progressed, and obviously we know the summer is one of the best times to sell, they pretty much right through the summer selling months, June, July, August. By Labor Day, they had dropped the price down to $549, and this property is still actively looking for a buyer. So this property started at $850,000 and now is $300,000 less. Another example of chasing the market as opposed to really understanding what the buyer pool would actually look like. And again, maybe not counseled well by their realtor, by the listing agent, or maybe, who knows, maybe the listing agent did a great job explaining what the market is and maybe defying their counsel. But if you think about this seller now, upstate New York, it's probably starting to get a lot harder to sell after the summer is over. It's going to start getting colder now. And we're almost into October. So this seller has essentially lost the hottest part of the selling season, May to August, and is looking at going into October now, and still has a listing that says that it's 1,176 square foot when it's clear from the explanation in the write-up that it's about a 3,200 square foot house. So they still haven't even corrected their error on this. So this is another example of not really looking at everything that's going on with how they are marketing this property to get it sold, which is probably what's causing a major problem. Anyone have any feedback they'd like to share about this one?
Someone needs to fire someone. Either the agent needs to fire the customers, or the customers need to fire the agent, because that description, it's almost nonsense. I mean, I understand what's going on with it, but it's nonsensical to a layman.
And Sean, I think I'd even add on top of that, if anyone is using a filter to find a 5-bedroom house, and let's just say they're starting at roughly, a requirement of 2,000 square feet for a 5-bedroom house, this house may not show up in that search. And what a shame that would be for this seller for such a small clerical error, because that's really all it is. It's a clerical error.
Yeah, I just want to say one thing. I know that to save a lot of money when selling a home, sometimes you can list it yourself for a flat fee, like through Congress Realty or something. So it's possible the seller just listed it themselves and doesn't really know what they're doing and made some big errors on this.
Thanks, Scott, for that. They may have done that. I don't know. There is an MLS number on here, and it says it's also listed on UCBR. I don't actually know what UCBR is. Anyone here from upstate New York on this call today? Or because I don't know if that's an actual MLS, and maybe it is, that's the one that they use. So maybe exactly, good point. This is just being sold by the owner, and the owner hasn't paid attention to some really critical detail. And now they've lost the whole summer selling season. So yeah, this is really a disaster so far, to come down $300,000 like that. Okay, I'd like to share one more unless there's any other comments on that one.
Ulster County Board of Realtors. So it's their version of like a CRMLS for California.
Oh, okay, good. Thanks, Sean. Thanks for that. So we know it's a real MLS, that's fine, but not too much else. I'm going to share one more with you guys, and we could find examples of mistakes like this all over the country, I'm sure. But I think we all agree that one of the things we have to remember is that COVID really enhanced a lot of the MSAs across the country. Los Angeles, Dallas, Houston, Austin for sure. Several MSAs like Jacksonville and Miami and Florida, Boston, not so much New York, but certainly Denver, Midwest for sure. So we know that COVID provided an opportunity for people to look outside and activate some equity and to start diversifying holdings and buying, basically buying vacation homes, second homes, in some cases, investment properties. And, but even though you have money, you still have to remember that capital without information, capital without informed information is at risk and can be lost very easily with poor decision making. So I wanted to highlight a couple that I just come across recently this week. This is a property here that's a 5-bed, 6-bath, 5,347 square foot in North Barrington, and sitting on 2 acres of land. And wanted to again just show you a little bit of price history. So this was a property originally that looks like it was acquired for about $1,335,000 back in 2003. And at that time it sold for $250 a square foot. So 15 years later, it was listed at 115. So $1.5 million, so at a loss 15 years later. And that listing was removed 5 months later. So the property was essentially taken off the market, but then it was reintroduced to the market in 2021, which was 18 years later for 1.2 million. So let's remember here that this property was originally purchased for 1,335. It was reintroduced to the market in June. I'm sorry, not in June, in May at 1.2 million. So they already have a built-in loss here of over $100,000. And that's a good 18 years later. Now, something I should point out is that they did introduce the property to the market in May. So they brought the property to market at a great time, May, June, July, August, great selling months, warm months, even if you're in upstate Illinois. And this property was repriced after 1 month. They reduced by $100,000 in June selling month, July selling month, August selling month passes by, no activity. And right around Labor Day, they repriced the asset and dropped it, looks like from 1.1 to 950,000, where it now stands today. Keeping in mind, gang, that this property was originally purchased, how many years ago was it? 18 years ago. To put it in perspective, my daughter was born in September of 2003. So in the same amount of time that my daughter grew up and became an adult, these people actually have already lost somewhere between 1.335 and 950,000 where it is now. So they're down a good over $300,000 before any kind of closing and selling costs. Again, luxury, beautiful property. Okay, really gorgeous, as you can see here. Executive style living, definitely not a property you would think of as like a fire sale. And yeah, just a great property. And I'm going to keep my eye on it because I really love this property. Actually, I'm almost thinking that I may purchase it if the price keeps sliding, because it looks like a great getaway retreat home for sure, especially in the summertime. So anyone want to share anything about this property? Would anybody here on this call like to think of any investment they make in real estate as an 18-year investment as something? Would you ever think that you would have actually lost money? That's a hard one to stomach.
Not unless a toxic waste dump was discovered or something.
Right. Yeah, good point. And that could be a lawsuit too, right, Sean? Because if all of a sudden that showed up, which was undisclosed, by the previous seller, and the buyer didn't know. I know in California, if you're on a Superfund site or near a Superfund site, and you have knowledge of that, that is a disclosure for the seller for sure. So.
Yeah, I'm scouring Google for anything about this region, and I mean, other than normal Chicago-ish news, I mean, it's just Northwest Chicago.
But Sean, let's not also forget too, that the drive to North Barrington from Chicago is a good 50 minutes, right? Would you say? Sean, you're muted.
Depending on traffic, but yeah. I mean, downtown Chicago to this place, easy hour.
Yeah, okay. And maybe without traffic, it's 45 minutes. But the point being is this certainly is not a rough Chicago neighborhood that has that has any of the elements that maybe we see on the news, right? So yeah, this is a very country clubbish neighborhood. So I want to show and share this with you guys, because this is the kind of thing that I do on my call, where we look for opportunities to remodel properties and to improve them. But obviously we use very grounded methods to approach a remodel, to approach fixing up properties. If anyone wants an invitation to my call that I do, it's every Tuesday at noon. Just feel free to just put your name in the chat box, and I'll be happy to send you out the invitation. I do it every Tuesday at noon, and that's noon Pacific time for anybody who's living out of state. Anybody else before I switch gears here? Maisha, the recording, yes, be happy to. And Scott, yes, be happy to. Okay, great. So I appreciate you guys coming on the call today. So I wanted to bring on a guest. I'm going to stop sharing now. And okay, great. I wanted to bring on a guest who Bill had invited. Mm-hmm. And if there he is. Okay, fantastic. Christoph, I just want to make sure you're there. Christoph is going to share a little bit now, and a little bit about leads. And he is from Land Voice. So Christoph, if you want to take it away, go right ahead.
Thank you very much. Paul, can you give me screen sharing rights?
I can do that. If you can give me 1 second, I'm going to just let Jess know what's going on.
Sure. Meanwhile, I'll let you guys know. So I'm with Land Voice for 10 years, and we are data experts and lead providers for the industry, and have been serving the industry for 30 years already. So I've been VP of Business Development for 10 years. And I'm going to share with you now how we can help you get more listings and also find some great investment properties. Let me just go right here really quick.
Is it working? Or?
Yeah, it's working perfectly. Okay.
Okay, thank you.
So we're talking about investment opportunities, right? And one of those great opportunities that came out because of the moratorium that's coming to an end is, of course, pre-foreclosures. Not a secret, almost everybody has a lead source for that and knows where to get those type of leads. I'm going to show you how Land Voice can give it to you, and you can compare it, what you currently are doing, and see if that works for you. We have been providing pre-foreclosure leads now, I think, for 20 years. Our sources are, of course, county records and our court records also, but we get it to you very early. Okay, so no matter where in the country, as soon as it becomes a public data, we grab it and give it to you. You give us your top 2 counties. But here's a really cool thing. I know that you're sometimes getting phone numbers from title, right? And you probably know that they're hit and miss. And it's sometimes a little frustrating, when you don't get to them right away and you say, oh, these are bad numbers. Sure, they're free, but they're probably as worse as much as not paying anything. So we get you the best phone numbers for your pre-foreclosures. And here's what's really important. We want you to be safe and compliant. That's why we scrub every number against a do not call registry. See right here where that's circled, that's in real time. Now you can, and that's my favorite part, we have a date range where you can search back as far as 2012, which is probably too far. I would search back right now to December 7th of last year, maybe October, right when, and I can tell you over the phone why I choose those dates, but I want to go a little bit before COVID to capture all those that never ever went into pre-foreclosure, went to foreclosure, but got a notice of default a while ago. And if I do that, for instance, in Orange County, Riverside County, California, I find about 5,000, 7,000. Sometimes if I add another county, 13,000 leads right away with phone numbers. And it doesn't cost you any extra, whether you have 200 or 13,000 leads in your LandVoice platform. So that's pretty cool. So you don't pay per phone number. You just pay for having pre-foreclosures, right? It's a one-time fee. So if you want me to tell you how many pre-foreclosures you have in your counties, I will actually do a free lookup. I promise, Bill Krause, I will do that for free for you. I will tell you how many you have in the LandVoice platform. So text me at 801-582-9459. And then after the webinar, I will get back to you and let you know what I found.
Please text here that we can write down your number. You're so fast. I'm sorry.
Okay. Can you see that? All right. I will show it one more time.
Excuse me, could you please put your contact information in the chat? It would really help us.
Oh, yes.
Yeah, Christoph, the chat would be fantastic so that everybody can access it. Yeah.
All right.
Thanks, Ed. I appreciate that.
8294559. Okay, let me do that really quick. Okay, 801 582 9459. And just that you know, I will let you know the price even during this webinar so that you understand what the cost is. Here's my name, Christoph Malzel of LandVoice. Okay, so now I want to show you something else that I think you should know about. Oh yeah, we give you scripts and training, that's all included. There's nothing extra, so we don't have any hidden charges. I wanted to tell you about a product we actually released this week, and you can get early access to it because we make the official announcement a little bit later. But our geo-farming tool may solve quite a few problems that you may have, right? When you have a listing, open house, or you want to send out postcards or do a texting campaign to neighbors, you know the reason why you do that is because you know that listings have babies, right? I always say jokingly, every time you have in the real estate activity, whether by you or your competition, you'll know that there are buyers and sellers coming out in that neighborhood, not by coincidence, but as a direct relation to that real estate activity. So we worked for the last 2 years to provide a really nifty neighborhood search tool for you. I'm going to show you how it works really quick. You draw a boundary around the neighborhood where you want to prospect leads, where you want to capture neighbors. And when you close that boundary, you can do a circle, rectangular, or I like this polygon. You capture everybody automatically. But you can fine tune it and say, you know what, square footage, bedrooms, bathrooms, single family, condo, land, whatever it is, that's what I want to go after. Now, here's what happens when you click submit, and that's awesome. You get now their cell phone numbers. Again, unlike with other companies, you don't pay per cell phone number. You actually get 3,000 lookups a month and up to 3 numbers per record. And those are amazing numbers. They come from the same database like private detectives, attorneys, and law enforcement find how to find phone numbers. And again, we scrub them against the do not call registry. So 3,000 lookups a month, and that should be sufficient for anybody really in real estate. So you can find all the missing pieces to context in your database with that tool. I love it. And finally, Paul, if I just may add something that doesn't have to do much with investment, more like if you want to get listings and get sales, all expireds right now, guys. What I've seen from our top agents, it's the nichiest lead source right now to get a lot of seller leads during the fall. I'm going to show you why. It's pretty obvious, actually. 2 years ago, the average listing price in the US was $240. Today, it appreciated by 30%. $72,000 in average to $312,000. So why is that important? because the homeowners who had the home on the market 2 years ago or last year, sitting now on much more value for the home because of the appreciation. But here's the funny thing is, most agents don't even go back 2 years to bring them back on the market. Yet, we have dozens and dozens of home sellers who have not yet relisted and who had the home on the market just 2 years ago. And the beautiful thing is they have not even sold it last year. They were just riding out that year and were waiting for the next year. And then they saw the market climb, like Paul pointed out, that cannot always climb forever. We already see flattening out. So now they're getting a little anxious and say, oh, maybe we should sell before it flattens out or before it goes down. So it's a perfect timing to reach out to those expireds and take advantage of that situation. Here's how we do it at LandVoice for you to make it easy. You don't have to call thousands of leads. We eliminate the competition basically because we give the leads only to one agent per zip code and year. And here's what we do. You give us a couple counties, zip codes, and we get to work. We have a patented technology that removes all the foreclosures, actives, and solds out of all the zip codes that you prospected in the past years. I would focus on 19 and 20. And then we add the cell phone numbers. We also do an absentee owner lookup and give you the absentee owners, the address, name, and phone number, no matter where they live. And we make that list exclusive to you. Guys, I cannot stress enough how much success our clients have right now with those type of leads, with all expireds. That's what it looks like when you get it. You get name, all the information about the home, and the phone number scrubbed against the do not call. And that list is exclusive. So if you want to know how many you have, we give you the scripts, but I also will tell you which zip codes are available, give you a couple of free scripts just for the lookup, and you text me to the same number, 801-582-9459. I will let you know after Paul is done what's available, and here's the price that you can get. It's really so low, it's ridiculous. Normally we sell a zip code and year for past year for $250. We guarantee a minimum of 25 leads. Most of the time we find 50 to about 70. Now we give it to you for half price. I think that's the best I can do. I really had to sharpen my pencil for that, but you're limited to only 4 at half price, okay? 4 zip codes at half price. Here again is a number where you can get that, and I promise you, take it in order as received. You can download free dialogues at landvoice.com/free downloads. That includes your dialogues for all expireds and also pre-foreclosures. And if you want to get everything that we have, your daily expireds, neighborhood search, for sale by owners, the whole shebang, we call it the Pro Bundle. You also get that at half price. So if you're interested, let me know. As you can tell, I'm pretty motivated price-wise to do something for you guys. That's what I promised Bill. 5 bundles are available. Let me know. Happy to help. Hey, Paul, back to you.
Yeah, no, thanks, Christoph. And if you can make yourself available just for maybe a couple of minutes for some questions,
sure.
From anybody who might have some questions. I know that I just wanted to start off with one basic question, and which is that in the event that someone immediately knows that there's a zip code that they're immediately interested in, like let's just say, for example, I told you, oh, I know for a fact that I want to have the Beverly Hills zip code. Okay. So when I approach you with a zip code, are you able to look back? Do you have look back technology and data that can give you an idea of what the lead flow has looked like? If, for example, I wanted the, let's say the expireds, if I wanted to focus just on that?
Mm-hmm. Yes, if you want to focus on the old expireds, if we did a lookup for somebody in the same zip code previously, in the previous year that you're interested in, let's say 2017, and you want 2018, all right? And we also looked up 2019, then we give you a good idea how many leads may be in that particular year that you're interested in. But if we never ever looked it up and we never scrubbed it, we actually would have to go through the scrubbing process first to find out how many leads there are. Okay. So for that reason, I always tell people, give me about 4 zip codes. We do a guarantee if we only find 25, which is actually pretty good. But if we only find 25 or less than 25, we guarantee that we give you another zip code for free, just because we
Okay.
want to walk you away with a lot more than that.
Okay, so 25 seems like it's a baseline
The baseline.
that you're selling. Okay, got it. Okay, good, thank you.
Yeah.
David had a question for you. David, go right ahead.
Hi, I have a question. I'm a real estate investor. I do not have real estate license.
Yeah.
Do you sell us pre-foreclosures?
Yes, we do. We sell you pre-foreclosures, neighborhood search, and for sale by owners. Connect with me. You have my number, and I can show you how much that is. I give it to you at half price as well.
Okay, great.
Thank you.
Great. And while we're waiting for more questions, I had a question. Geographic location. Is your service geographically bound to Southern California, or is it open to the continental US? Can you just give me an idea what the territories that are available?
Yes, we do business in every single state, even in Canada. So if you have anybody from Canada, we do for sale by owners and neighborhood search there. Yeah, it is not bound geographically. And if we have two agents in the same region, we actually, you may be getting the same data. It's very unlikely, though, that you have that extreme identical overlap of being in the same neighborhoods. So organically, it's actually pretty unlikely that you run into somebody else with the same data.
Sure, sure. So, so if you, like, let's just say someone wanted to look in upstate, like Chicago, like Illinois, and they wanted to work the let's just say the expireds, and then let's say that they wanted to expand to not only doing expireds, because maybe they were having a lot of success where they just wanted to start adding you know, just neighborhood zip codes. Do they go back to you to do the upgrade, or are they upgrading right from the dashboard that you just showed?
It is possible to click on certain links on the dashboard to be contacted by a salesperson and upgrade. I wouldn't recommend it because they actually sell almost at full price. They have little discounts available. I would recommend they contact me directly. I'm not on commission. I'm VP in the company. I give special deals. They don't like it when I do that, but I promised Bill that I would treat his group like that. So please, keep my number in your phone. You may need it. Okay,
great. And is this just for owners of single family homes, or are multifamily apartment building owners? What product types? What real estate types are these numbers available for?
So it's always for the homeowner.
Homeowners.
If there is an apartment owner who has a multiplex, then you would get the phone number and the address for the actual seller, which is the homeowner, not the renter.
Got it. Okay. But it's primarily 4 units and under.
Yeah, well, it's primarily for single family homes, but of course, if your area is in a beach community and you have a lot of condos and multi-condos, then you would get the addresses and the phone numbers for the actual owner, for the seller. Okay, great.
Questions? What other questions does our group have here for Christoph? Anything else we haven't asked, or? No questions. Okay. Well, that's great. Christoph, you were very thorough with the information. So thanks very much for sharing that today.
Thanks, Paul.
I said, yeah, absolutely. Bill will appreciate that you came on. And everybody, if they do need Christoph's information, it is in the chat. So I did double check, and you said you're also an owner of the business. Is that right?
Well, yeah, I'm second in line, I would say.
You're second in line. Okay. So we're talking to someone who is a decision maker. So if you really need leads for your business and you feel somewhat tapped out, or maybe the source you're working from right now, maybe title has been providing information, but it hasn't been the most accurate, then here's another source for you with Land Voice and Christoph. So thanks, Christoph. Appreciate it.
Thanks. Yeah, we've been in business for 30 years. So by now we know we really know what we're doing.
Good. That's great. That's good to
Yeah,
hear.
thank you.
All right. Well, thanks for being on the call today.
Appreciate it, Paul. Bye.
Yeah, you got it. Did anyone else want to cover anything on today's call? Anyone
Paul,
have any?
before I go, you have to ask for host rights back, because otherwise, if I leave, I disconnect everything.
Oh, okay. So let me see if that's something I can.
Maybe I have to assign it back to you. Let me see.
I asked Jess to help me out, so.
No, I can't do it. You have to do it.
Well, it might be okay. Anyone else have any questions? If not, we're going to end the call early, a little early today. Any questions from anybody to cover anything at this point?
I got a question.
Hi,
I'm just
Roll.
getting into real estate. I want to know what the first thing I should learn is.
What exactly got you originally interested in real estate?
I'm 16, so I wanted to work on my future,
Okay.
and
And
real
when
estate just safe.
Okay. And who originally had invited you to Bill's that got you interested in learning using webinars and like, do you have a mentor that maybe turned you on to this, or?
No, I just searched up real estate conventions nearby, and this is the first thing that popped up.
It was. Oh, that's great.
Right.
I love this. So there's a lot of ways that I could give you some feedback and answer that. One might be, the first thing is do you want to do real estate in a particular part of the country, or are you looking to do real estate in your own neighborhood, right in your own backyard?
Probably in my own neighborhood for now, and then branch out.
Okay, fantastic. Then what I can definitely recommend to you in terms of one of the resources that I really loved was Gary Keller's book called The Millionaire Real Estate. It's the MREA, and I might be not exactly quoting it exactly. The Millionaire Real Estate Agent, I think it was. And the reason why I love that book is not because it's about teaching you to be a real estate agent. It's because what it teaches you is to learn how to reach into the network that you already have now, which means your family, your friends, colleagues. Do you go to school?
Yeah.
Yep, colleagues, school students. And what he teaches is about letting people know this is something I'm doing. Do you know people who are looking to sell their property now? Because I might be interested in buying it as an investment.
Mm-hmm.
And what he does is a great job in that book explaining how to reach into your network, how often to reach into your network, and all the creative ways of reaching into that network to always keep on top and essentially letting them know, hey, this is exactly, this is the guy to go to if I hear that someone's going to sell their property. And with you telling them that you're interested in buying their property as an investment for your future, yeah, they might have a lot of questions, but it's a great way for you to introduce to them in a very honest and transparent way. This is what I'm trying to accomplish. And you in turn, then finding yourself a mentor, someone that you work with very closely, weekly, might even be daily, but weekly, and learning how the business works for the particular asset class that you're interested, whether it be single family homes or multifamily apartments or commercial buildings. Like, are there some stores that you go to when you shop, for example?
What do you mean by that?
Stores like when you buy electronics, or when you buy your clothing, or when you buy your food. Are there stores that you go to? What are some of the names of the stores?
I mean, 7-Eleven right next to me. There's a bunch of Best Buy, everything.
Perfect. 7-Eleven is probably owned by an investor, that building. And 7-Eleven as a franchise is probably leasing that building from an investor. And you can be that investor. And they pay you a check every month to lease that building. And then you in turn promise whatever it might be, such as things like you'll pay the property taxes, or you might pay certain insurance or whatever it might be. So that could be an investment for you, not just a home, but all of these places you just mentioned. You mentioned Best Buy, right?
Mm-hmm.
Best Buy could easily be owned by an investor.
Yeah.
And every time some store comes into your neighborhood, what state do you live in?
California, right down on Sunset.
Oh, okay, fine. So you're in LA. So anytime you see some franchise, which is what Best Buy really is,
Mm-hmm.
and you see a Costco, which is what that really is, some investor or group of investors owns that piece of property, and it made a deal for that tenant, which is Best Buy or 7-Eleven, to come in there. So there's so many different investment types you can make in real estate. One of the best things to do is figure out what would interest you the most, and then working directly with a mentor to start focusing on that particular product type. Right now, one of the product types I really like is multifamily apartment buildings. I understand it very well. I have fixed them up. I learned a lot from my single family days in order to move up to multifamily. So it's a product type that I get excited about. So one of the things I always try to tell people, especially in real estate, is that there's a lot of avenues in which you can focus and specialize in terms of being able to make money. But the best place is always the one that you're most interested in, because that's the one that you're most likely going to stick with. Does that make sense?
Yeah, that's very
Awesome.
helpful.
Awesome.
Thank you.
Great. You're welcome, Raul. And thanks for being on the call today. Is there anyone else that had any other questions or comments or want to chime in?
Yeah, this is Nick Cates. I had a question I wanted to ask to the group. Kind of piggybacks on what you were saying about multifamily. I am interested in developing a property that I currently own. It's a multifamily property in LA.
Okay.
And it's a 4-unit building. And it's in a transit-oriented community, which means that the city is offering incentives to build more dense housing. And I'm interested in actually taking advantage of that and exploring developing it. I don't have a background in doing that size project, so I'm interested in JVing with someone maybe who has more interest, more experience, or that kind of thing, and would love to capitalize on the opportunity that's available. So I'm interested in connecting with anyone who's kind of in that area and might want to know more about what the opportunity is.
That's great. Thanks for sharing that, Nick.
I'll text my telephone. Please write down to me.
I'm
David.
sorry, I missed that. I had the wrong earpiece in. I couldn't hear
I
what you
see.
said.
My name is David. I'll put my number. Please give me a call back. I'll help you.
Okay, that's great.
So what Nick is talking about, everybody, is Nick owns a piece of property. So let's ask Nick a couple quick questions. So Nick, you have some interest in developing this property into something bigger. Did you want to fund that development, or are you thinking that you would joint venture with a partner who would contribute funds as well as construction expertise?
You know, I'm open to any alternative. I'm open to raising money. I'm open to venturing with or joining with a partner or partners who have both the expertise and the available funds to move it forward. So it's just a matter of what the best scenario is for all involved.
So the first thing I would maybe mention to you is this: if you have the funds to develop the property yourself, then that allows you full control. Mm-hmm. Control is a really big part of real estate development of any kind. So when you start reaching out to finance properties, whether it might be through a bank or might be through a lender, and we do have a lender on our call today, it's Ed Berlinski, who's a hard money lender. Mm-hmm. What they're going to ask about is the control, and the control person is the most important person, because they, for example, will be making all the very, very hard decisions, right? So the number of units that you're going to build, when you're going to start the construction, when what kind of property you're going to develop, who the architect's going to be, who the structural engineer is going to be. So the controller, the decision maker, is going to be making all these decisions. And if you can do all of those on your own, then that would make you the perfect person to essentially go to a guy like Ed and say, I want to just borrow all the funds because I'm going to make all the decisions. Now, that works perfect. That scenario works perfect if you possess all of the experience and expertise to make all those decisions on your own, because you'll stand to make the most profit. Does that make sense?
Yeah, it makes perfect sense, but there's a cost involved with, learning everything on the job, so to speak. And
Yeah.
since, and control is great, but it's not great if you're costing yourself money by having to learn things that other people with expertise may know. And I built an ADU and I built some other smaller projects, but I know this 15-unit potential project, there's so many ways that this could run into issues. And so,
Sure.
So it's interesting at least to have, whether it's on a consulting level, I mean, that's one option toward what you're talking about. You don't give up control, but you have someone who has an interest in the project from a consulting level, or they bring more to the project and they really can help move it forward. So, I'm open to options. And my information is in chat as well if anybody wants to connect regarding it.
Perfect. And Nick, your open-mindedness about it is how you're going to succeed, because in essence, what you just described is that you have experience in real estate doing like certain projects, and you recognize that your experience is at a particular, let's call it budget level, maybe a couple $100,000. When you get into a 15-unit, that the experience required might involve, say, $7 to $9 million. And at that point, someone's going to need to be the key decision maker in terms of who would be the best construction company. What is their track record in terms of building 15-unit? Are they well insured? Is the site appropriate for 15 units? Has an appropriate feasibility been conducted in order to determine that 15 units would be absorbed quickly enough in the market? And by the way, I'm not making any assumptions. You might have already done a lot of this homework, but these are some of the considerations that, and I'm kind of just sharing this for the whole group. These are considerations that anybody would have to do if they were in your position. So you've got a great opportunity here, it sounds like, for someone who'd like to JV. I know I'm going to write your information down because I'd like to learn a little bit more about it. I've done 14 unit. I've got a 12 unit myself going on right now that has a single family house that's in the backyard of a 12 unit. So I've done some interesting projects. And if there's anyone else on this call today that wants to learn more about Nick's project, whether it would be to be as an investment partner, a lender, someone with development experience, architectural experience, structural experience, appraisal experience, those are all things that would be really valuable to Nick for sure. His information's in the chat box. Anyone else had a question for Nick? Thanks, Xavier. I saw your note. Thanks very much.
Hey, I have one other question to something that you just mentioned. My first step here, to the point you just made, is to figure out exactly what can be built. Now, I did some, investigations on my own through the city of LA, and they have certain information about the transit-oriented community project that they have, which gives you these incentives on building, giving limitations on parking and on providing a certain number of low-cost units. But what I'm doing today is I'm having a call with an architect to have them maybe initiate a more formal study about what can be done. And I'm just wondering, that's probably going to cost me, if I decide to do it, it's probably going to cost me about $5,000, I think, to have them actually do the drawings and the whatever, not the full plans, but essentially some options on what could be built based on, what their assessment of the current laws and, limitations and so forth are. So my question is, anybody who has a level of experience, would that be something you do spend money on to do that? Or would you take another route to kind of figure out what's possible?
So can I chime in here? I don't know if you guys can hear me.
Yes. Yeah, we hear you good.
Steve Richardson, down in Long Beach, California, another KW agent. I develop property, buy and sell, and so on and so forth. Been in the game for about 20 years. Nick, before you pay for the capacity study, let's have a conversation. I know some people at planning that can kind of give us some insight into what you can do with TOD, what you could do with PSH, what you could do with AB 1763, all of these different rules that are on the tables that actually give you an increased density, so that before you pay like $5,000 to find out what we could find out for free, right? I'd be glad to help you just to, and also you could go just on brickwork.com, right? Brickwork will give you basically a very quick, but behind the envelope type of study where it does all the quick analysis on current zoning law for you here in the city of Los Angeles, right? So it'll give you kind of a layout. It'll say, it's C21BL, it's this size, here's the capacity under this, here's the capacity under that. And you can use that as a basis to know what you can do. And then when you decide to go to an architect, you're already telling him, okay, this is what I know is already possible, draw it like this. And you probably want to even have a conversation with the council office if you're going to try to do something that's big before you actually pay for your capacity study. So you don't want to put that money out there yet.
You all just want to piggyback off that as well. You also can do your boundary lines and just kind of show your density of your map, your vicinity map of your location as well. And then also ask about incentives for doing affordable housing. You could also get some incentives for doing affordable housing to your unit. It says 15 units. If you do affordable housing, they may allow you some more parking, or if you're close to intersection with bus transit, they may give you some additional free parking as well.
Yeah. And even another story if you're going to go 100% affordable. So if they limit you at 3, they'll actually give you another one as an available incentive. That's really not even an off menu type of thing.
Right.
So there's some other research to do before you actually spend that money.
Great.
Steve, thanks for that information. That was great.
No problem.
Yeah. And Nick, quick question. And I was gonna get around to this, but have you actually gone down to the city yet and just had the conversation about what the city, in your location, what they would support if you were to do some development, and just a generic conversation? Have you talked to anybody?
Like go down to building and safety?
Yeah, and just kind of have a conversation about, I'm the owner of this property. I'm thinking about developing it and expanding capacity. Curious to know what you guys would support in this, in this part of town, on this particular street. I know there's some other development at this particular site, or maybe some projects you've seen in that area. Have you had any conversation with the folks downtown?
I did. I went to building and safety actually
Great.
before COVID. I went, this has been probably 2 years ago now. And that's when I got that's when I initially started thinking about this. And then when COVID came in, the building was completely leased up. And so during COVID, I didn't want to really pursue it. But then, now that things are maybe normalizing, it may be time to have that conversation again. I was able to get 2 of the units vacated already. And then I've got 2 older tenants that would still have to be addressed. And that's really one of the big issues about this is, what would it take to get those units vacant so that you could move forward?
Okay.
Go ahead, I'm sorry.
I was just going to ask, in that preliminary conversation, Nick, when you kind of mentioned the idea of doing some development, did the city respond back to you that they might like to see some kind of zoning change to the zoning that is, you know, what it is now to be something different in order to, you know, have you realize your dream?
Right. Well, they already at that time, and I don't think it's changed based on the lot zoning. You know, there I could build up to 15 units based on what I was told before, and there's certain height restrictions and things like that. So I'm already aware generically of what can be done, but the part how to deal with parking is going to be the limiting factor, you know, based on having a certain number of affordable housing units and so forth. That's going to be the limiting factor. And also, if you go full hog, there's going to be the construction cost, because if you build below grade, that's a bigger deal than building, you know, a property at grade with parking on the first level, you know. So there's all that, and that's the thing. I don't want to plan for something that's so expensive to build that it takes away from the, you know, the upside possibility.
And I just want to interject, even if you did tandem parking with subterranean parking, that would cost you about $20,000 per parking stall, tandem parking. You do subterranean parking, just based on the numbers I've done in the past. And also, I think if you're doing a 1-bedroom, if you have 1 bedroom, 2 bedrooms, that also impacts your parking, because if you have 2 bedrooms, about just 2 cars, maybe, you know, 1.5. But those things you want to address as well with your parking, being if you do affordable housing, how much they're going to allow allowance for you for parking. And everything that everybody's speaking about is good information for you.
Absolutely.
Good follow through information.
Absolutely.
Gary Payro has his hand up. Gary, go right ahead.
Thanks, Paul. Sorry I'm late, folks, but I am glad to be able to talk to you. I have several projects, and I'm just going to kind of throw them out there. I need either lending or joint venture on a number of them. One is, I'll go through them quickly and not take up a lot of time, but there's a $2 million mobile home portfolio with dirt. So it's kind of cool. If you don't have the land, then the loans are just chattel loans, and they're, you know, private property. So these are portfolio. I mean, these are real estate, and it's in South Carolina. And the yield on that is about, all cash, the yield would be about 13%. And with financing, we could get significantly better. I've got an REO in Houston that has a profit of about $400,000. So I'd like to either work with someone as a lender or a JV on that. I've got a personally a $40,000 note on a $200,000 single family home in New Jersey. I'm looking for someone to give me a loan on that. Terms are negotiable. So that would be that's about a 6-month term, so you can get your money in and out quickly. And then I've got a slam dunk solution for anybody who is, you know, they're more, now that we're coming out of the mortgage moratorium, or the foreclosure moratorium, a slam dunk solution for people who are in arrears and can't figure out how to do it. It's not a loan. It involves purchasing a remainder interest in the properties. And so if somebody wants to put their money in with me on gaining access, and it works great in places like Los Angeles, where you've got a lot of appreciation. Basically, you can go to people who need a solution now, and you're not loaning them money, but you can really, so you're not subject to Dodd-Frank or usury laws, and you can create some very profitable deals that way. So my name, I'll put my name, I just sent that, I'll put my name and contact information in the chat.
That's great. Thanks, Gary. We're coming up on the hour, folks. It's actually a little bit after. I'm sorry that we went over. So I'm going to be jumping off. Is there anyone else who wanted to ask a question, or anyone I missed before we jump off?
I have one question.
Go ahead.
Starting a new real estate division of my company, what would be the best platform to find credible real estate agents?
Commercial or residential? I'm sorry.
Commercial.
Yeah, so with commercial, I mean, I'm just going to share my method it's the interview process. It's I look at I look at it all as numbers. It's a numbers game. You're networking and interviewing at the same time. That's the way I look at it, because these could be people that you do future business with, or you're hiring them, or it's both. So the more you talk to, the more you interview, the more you're going to get a feel of what is going to meet your needs. Thanks, Melissa. We'll see you next week. But absolutely, if you don't have a person specifically, and also, by the way, these calls, there's some people on these calls right now that I think Steve actually said he's down in Long Beach. If I remember correct, he's a commercial broker, 20 plus year. So it's all about, real estate is absolutely, like Bill says, it's a contact sport. The more people you contact, they are either going to be someone you hire, someone you partner with, combination of both. So treat it as such. And the more you talk to, the more you're going to get a feel for what works for your situation. I don't know if that totally helps, but that's how I would go about it. And in terms of the geographic location, that part is pretty simple. If you're in Long Beach, you would target the people who obviously have closed listings, who have open listings, people who are active. That way you're talking to people who, generally speaking, they have they're doing business in the city or the locale that you're conducting your business in as well. So I hope that helps.
Yes.
Fantastic.
Thank you.
Yeah, you're welcome. Well, thanks everybody for being on the call. We are past the hour, so I'm gonna knock off for now, but appreciate everyone being on the call. Like I said, Bill was on holiday this week. He'll be back next week. And again, if anyone wants to join on my call, it's a free call, Tuesdays at noon. We are centrally focused around remodeling and rehabbing, but absolutely lately we have been delving into all aspects of JV and deal making. So if you'd like to jump on that call, leave your information in the chat box. Happy to have everybody. Happy to have everybody on. Great to see that people were participating today. So thanks very much. You all make the call what it is. So your participation really does matter. So thanks everybody. And we will see you next week. Thank you.